Hello and welcome to RCTV. We're joined today by Mark Selby, Chairman and CEO of Canada Nickel Company. Thank you for joining us. It's been a while, but finally here we are back in person for PDAC in Toronto. For those new to this story, Canada Nickel possesses industry-leading nickel expertise and is focused on low-risk mining jurisdictions. Known for its Crawford nickel discovery in Timmins, Canada Nickel is a terrific name to keep an eye on. Mark, what have you been most excited to see and do this year at PDAC?
I think just getting back in person, seeing people in little boxes on TV just doesn't match up to actually seeing people in person. And then, again, a big part of PDAC is not just all the formal one-to-ones in the booth, but it's a chance to connect with a lot of people at the various events that happen in the evenings. And so, it's been a great 3 days. So
great. And for those who aren't familiar with the Canada Nickel story, what would you really want a new investor to know?
Yeah, so I think there's really sort of four key things here. One is we think nickel is about to go through one of its super cycles that it goes through every 15 to 20 years. Late 60s, late 80s, mid 2000s, and now, earlier this year, about 6 weeks ago, the LME shut down because there was such a fundamental market imbalance and prices spiked as high as $100,000 to $145 a pound. That was way earlier than I thought that kind of movement was going to happen. However, I think it's a sign of what we think is going to happen in kind of the 2023-2025 period as we see this huge new demand increase from the electric vehicle market on top of continued strong demand from the stainless sector. So that's number one. Number two, this is the largest sulfide discovery since the early 1970s, and we think we're unlocking an entire nickel district that's going to contain multiple Crawfords, and we're working on that over the next few years. Three, we're in a location where you can actually, permit and build a mine just outside Timmins. You've got all the major infrastructure in place. We've got great relationships with the local communities and First Nations. And then fourthly, this type of nickel deposit, we think is going to be the key source of supply for the market going forward. It has this unique property where the tailings and waste rock, the minerals that this deposit is hosted in, when it's exposed to air, they spontaneously absorb CO2. And in a place like Ontario, where we have access to low carbon electricity, we can design a mine that has a low carbon footprint to start with, and then with the carbon credits we expect to generate from these tailings, actually be not only a zero carbon nickel operation, but actually have carbon credits available for sale. So we think it's one of the most compelling stories in the market today.
Great. And tell us a little bit about yourself and your background. How did you get started in the industry?
Yeah, so I worked outside mining for a decade in management consulting and private equity. I had a subscription to the Northern Miner when I was 9 years old. A strange kid. But I ended up in mining in 2001. I joined Inco as head of commodity research, and then took over as head of strategy in 2005 when we tried to merge Inco and Falconbridge together, create a great Canadian base metal company headquartered here in Toronto. Unfortunately, Vale and there was then Xstrata, now Glencore, won the day. But that's how I got going in the space.
Great. And looking at the industry now, how have things evolved or changed from when you started?
Well, I think that, one of the things that, again, I think investors should pay attention to is, what we've started to see now with electric vehicles reminds me very much of what we saw in the 2001-2003 period, when China sort of came to the fore. I know everyone looking back now thinks, China was a no-brainer. Everybody knew that metals demand was going to go through the roof because China was going to use all this metal. I can tell you, having a front row seat at that during that 2001-2003 time period, there were lots of skeptics. Is it real? Is it a bubble that's going to burst? Can they actually build all the stuff that they want to build? Blah blah blah. And so there was a whole series of excuses. And so investors who got in that first leg, saw kind of 10x returns, and then it was the rest of the market came charging in kind of the 2005 to 2007 period, and the equity valuations went up a whole other leg higher today. I think today, when you look at a lot of lithium stocks have had a great run, and are trading at pretty full valuations. But when you look at a lot of the other components of the EV raw material chain, they're still trading at a massive discount because people, are they sure they're going to use those chemistries? Are we going to actually be able to build all the EVs that people want to buy? There's a whole pile of excuses. And again, we had a little glimpse of it in the LME market with nickel earlier this year. But I think there's, again, just like in that time period, you're going to see some real fireworks by the middle part of this decade.
Great. And how do you see overall, and you have mentioned some here looking forward, but
Yeah.
how do you see things changing in the future of mining?
I think there's a sort of a number of key focuses. One, I think in terms of the environment, low carbon. Again, I think more people are embracing it. I think a lot of people just pay lip service to it and sort of haven't fully incorporated it into their DNA. And I think that'll continue to evolve over time. I think the second thing, what's interesting, and again, an opportunity in the junior mining space is, if you look back, and again, in the early 2000s and having been through that big mining boom at that time, you literally had, a lot more stories come to the fore. We still really, in a number of metals, don't really have a big project development chain in place, don't have a lot of new stories that have come to market. And so, for those stories that have made it to market that are truly new, again, I think it's going to be, more exciting as we get to the later part of this decade, as the majors start to grow again, and want to have new projects to start to build to be able to deliver all the metal that we're going to need for the 2030s and beyond.
Great. And now, focusing a bit on Canada Nickel's story, when would you expect to have an updated resource estimate for Crawford?
Yeah, so we've been telling the market, and we're going to have a resource out here at the end of this quarter, and quite excited by, where we think it's going to come up. We cut off the PEA resource at hole 65, and we're pushing hole 250 today, and probably somewhere between 200 and 220 holes included in this resource update. So, I think the market will be pretty happy.
Great. Now, drilling had also recently encountered a zone that was rich in the platinum group metals.
Yeah.
Can you tell us a little more about that zone and how that fits into the project?
Yeah, so what's interesting about, the way these deposits form is it ends up being what's called a layer. You get a layered structure. We have dunite, peridotite, peroxenite, and gabbro. And at one of those contacts, we get this PGM reef that's anywhere from kind of 3 to 10 meters wide. That the narrower parts tend to be over 2 grams, and the overall interval about a gram of PGMs per ton. And again, we'll be mining them, and so having that little extra grade kicker there is very nice. The other part is, within the higher grade portions of the main dunite part, we get elevated PGM levels. And I think the thing that people don't realize is, we're upgrading the content of the nickel, because the nickel minerals we're recovering are such a small portion of the overall materials we're producing, that any grade we have there in the PGM side is upgraded anywhere from 50 to 100x. So we can get to a point where we can have PGM concentrates to produce that have 20 plus grams of PGM in them, which is a nice kicker value-wise going forward, and that'll be reflected in the feasibility study.
Great. And looking overall at the metallurgy on the project, are there any opportunities to improve on the metallurgy, potentially increasing recoveries?
Yeah, so the two of the key focuses that we're embedding in the feasibility study, one is obviously the much larger resource, so we're talking about having 50 to 100% more material in the mine plan, so 1.3 to 1.8 billion tons. The second area key focus is exactly that, on recovery. So, we had done less than a year's worth of metallurgy work on this deposit. These still aren't off the shelf projects yet, and so we spent a whole pile of time looking at ways of improving recovery, and we're targeting 4 to 5 points of recovery. Each one of those is worth $90 million of NPV. And so, we put out a series of releases in the fall and into the early part of the year where, it looks like the flow sheet changes we're getting was anywhere from 6 to 16% improvement. So, this is an area that we're pretty excited and looking forward to, getting feasibility study update out by the end of the year that'll, be able to reflect those changes.
Great. And you've also recently announced an agreement to acquire the Bannockburn property, and you also have other exploration, kind of a portfolio of properties in the Timmins camp. Where does Bannockburn fit, and what are other priority targets?
Yeah, so again, I think this is one of the most exciting part of the story is, Crawford is the largest sulfide discovery since the early 1970s. And these types of deposits have a distinct geophysical footprint, and that's what we used to look around the Timmins camp, and we were very pleasantly surprised when 20 different things lit up. In the second half of last year, we picked up we did 18 deals to pick up 13 more targets beyond what we had. And there were a few more that we wanted to get. So Bannockburn and Newmarket, we announced. We actually approached the Grid Metals guys before they had started drilling because based on our geophysics, we thought it was a pretty good target. And sure enough, they did 10 holes that did a great job confirming the kind of view on that deposit. Aston Minerals is another one in the neighborhood, who looks like they've got a Crawford type discovery, which is another one that we had identified. So in terms of that set of targets that we've acquired, we're quite confident that, a large proportion of those are going to convert into some scale of resource. And the thing we've talked about in the release in some of our materials is, when you look at the resource, in Crawford, we were basically going to end up with roughly, close to 1 billion tons of resource for roughly 1 square kilometer of geophysical footprint. In terms of the overall land package now, we've got over 42 square kilometers of footprint. Some have had a little more work than less, and right now we're working with the properties that we have both First Nation agreements in place with and have physical access, because after the snow melts in Timmins, it gets a little soggy for a while. But as the year goes on, we intend to test a bunch of those targets, and again, some of the better targets we haven't got to yet, just because we don't have one of those two things in place at this time.
Okay, great. Now, stepping back and looking at the long-term strategy for the company, would you like to become a mining company, or are you looking to partner or sell with a producer?
Oh, we are going to push this project as far ahead as possible. One of our initial hires was a guy named Christian Brousseau. He was involved in constructing the Cisco, which is a large-scale, low-grade gold open pit mine mill operation. He led the engineering and construction as part of the Detour construction team, and so he was from early on, we knew this is something we wanted to build. We added another key member to our team, Des Turnkilla. He's a civil engineer by background, so again, we are putting the team in place to be able to build this. So we're going to push as hard and as fast as we can. The tricky part is, the reality is, there's very few good nickel opportunities out there. The majors have all stated they want to grow in the battery metals sector, and so we're going to do our best to keep our value as high as possible, and to make it as painful for them to be able to acquire us. But we'll see what happens through the next few years. But again, we've got the team, we've got the expertise to be able to push it forward, and we're going to push it forward as hard as we can. We can't control when bids come, but we can go either way. So.
Great. Thank you very much, Mark, for joining us today, and thank you everyone out there for your time. We'll look forward to next time.